Hey everyone, welcome. We're about to dive into a huge tax secret, one that a ton of businesses in hospitality and now the beauty world completely miss. The big question is, are you leaving a pile of cash on the table?
All right, let me just ask you straight up. Could your business be missing out on a six-figure refund? And I'm not kidding. For a lot of you listening, the answer is probably a shocking yes.
I mean, the sheer scale of this is just mind-blowing. Get this, according to the Federal Reserve Bank of Chicago, we're talking about an estimated $11 billion in FICA tip credits that go unclaimed every single year. That is a mountain of cash just sitting there.
And for the businesses that do know about this and actually claim it, the payoff is huge. The median refund, so the typical amount, is a cool $101,000. Think about what that could do for your business.
So why is that $11 billion number so ridiculously high? Well, this chart says it all. Somewhere between 80 and 90%, let that sink in, of businesses that should be getting this money never even file for it. It's wild. Almost everyone is missing out. Okay, so the big question is, why? Why is all this money just being ignored? It turns out the reasons are pretty simple, which honestly is great news for you.
And here's the number one culprit, the biggest misconception out there. So many business owners just assume, oh, my payroll service has got this covered. But nope, the vast majority of them will not automatically file for this credit for you. You have to be proactive and file a specific form, Form A8046, yourself.
All right, let's get into the nitty-gritty. What even is this FICA credit, and how does it magically turn a tax you're already paying into some serious savings for your business?
Okay, so here it is in plain English. It's a dollar-for-dollar tax credit. Basically, the government wants to reward you for doing the right thing, reporting your employees' tips. So they give you back the employer's share of FICA taxes, that's the 7.65%, that you paid on a certain portion of those tips. Now, there are a few key things to know about how this works. First, it's a non-refundable credit. That means it's not like getting a stimulus check. It directly wipes out your income tax bill. If you owe $10,000 in taxes and have a $10,000 credit, you pay zero. Super important, this does not mess with your employees' Social Security or Medicare at all. And the best part? If the credit is bigger than what you owe this year, you can carry it forward for up to 20 years. That's amazing!
Okay, so who gets to claim this? Let's check out the eligibility map and see if your business makes the cut. The details here are super important.
So historically, this has been for food and beverage businesses, restaurants, bars, you know the drill. They've been able to claim this for decades based on tips their employees make above a $5.15 an hour baseline. But here's the exciting news. Starting after December 31st, 2024, the beauty and personal care industry gets in on the action. The rules are a little different for them. The baseline is the federal minimum wage of $7.25 an hour, and there's a new catch. Their tips have to be more than 15% of their total sales for the year. Now, we have to talk about what the IRS actually considers a tip. It's not as simple as you might think. This quote here is straight from an IRS example, and it gets to the heart of it. If the customer is free to enter any amount on the tip line, then it's a tip. This is totally different from, say, a mandatory 18% service charge for a large party. That's not a tip because the customer had no choice. That's a service charge, and it doesn't qualify. So think of it like a 4-point checklist from the IRS. For something to count as a tip, it has to hit all four. 1. The payment has to be totally voluntary. 2. The customer, and only the customer, decides how much to give. 3. The amount isn't set by some company policy. And 4. The customer decides who the money goes to. If it checks all those boxes, it's a tip.
And here is a huge point, especially for all the salon and spa owners out there. This credit is only for tips paid to your W-2 employees. It does not apply to independent contractors or booth renters. Why? Because they're essentially their own business, so you're not paying the employer's share of FICA on their earnings. This distinction is absolutely critical.
Okay, let's talk numbers. Don't worry, we're just going to take a quick look at the math. It might seem a little intimidating, but I promise the logic behind it is pretty simple. All right. Here's a question I hear all the time, especially from restaurant owners. Wait a minute, the federal minimum wage is $7.25 an hour, so why on earth is the calculation based on $5.15? It's a great question. And the answer is kind of weird, but actually good for you. Back in 2007, a law was passed that froze the rate for this specific credit at $5.15. And believe it or not, that's a huge benefit. A lower baseline means that more of your employees' tips count as being above the threshold, which means a bigger pool of eligible tips for you to get a credit on. It's a win.
So the actual calculation breaks down into these 5 steps. Really, what you're doing is figuring out how much in tips was paid above that minimum wage base. You find the total tips, you do a little math to figure out the base, and then you isolate just the eligible part. Once you've got that final number in step 4, you just multiply it by 7.65%, and bam, that's your credit. It's just a process to whittle it down to the right number.
Okay, so you get what it is, you're pretty sure you qualify. So how do you actually go about claiming all that money you've been missing out on? Let's talk about the path to your refund.
This right here might be the best part of this whole thing. The IRS lets you do a 3-year look back. That means right now, you can go back and file amended returns for the last 3 tax years and claim the credits you missed. This is how businesses end up getting those massive refund checks.
Of course, the minute you hear amend a tax return, the big red audit flag starts waving in your head, right? It's the #1 fear for any business owner.
So let me put that fear to rest. As long as you do it right, meaning you have clear payroll records, good tip reporting, and your calculations are solid, claiming a legitimate credit that you are legally owed does not automatically increase your risk of an audit. The key is documentation.
So, what's the paperwork? It really boils down to 2 key forms. You've got Form 8484. That's where you do the actual math for the credit. Then, that number gets carried over to Form 3800, which is for all general business credits. You just file these right along with your regular annual tax return, like your Form 1120 or 1065.
So, I want to leave you with this one final thought. We've talked about billions of dollars being left on the table. We've talked about typical refunds being over $100,000. It really begs the question, and it's one you should take back to your business today. How much money have you left behind?